In today's market update, we're going to be focusing on gold. I have been promising for several weeks that we will be taking a detailed look at gold. Spoiler alert, gold has been bullish. It has, of course, been moving up. So we're going to discuss the peak that gold has been moving into in today's market update video. We are also going to take a very quick look at the S&P 500. There isn't very much to say about the stock markets to add to what we have covered in recent market update videos. And we're going to be taking a quick look at Bitcoin. And so starting with the S&P 500, this is the analysis we've been tracking for some time. In the previous two market updates, I believe I have been discussing the fact that the 20-week cycle trough probably formed in the S&P 500 as it did in other stock markets around the world in the beginning of September. In the S&P 500, it was on the 2nd of September. We had other markets around the world forming troughs within a few days of that. And in the previous market update video, I was discussing the probability that this trough over here was a trough of the 20-day cycle. I pointed out at the time that if you measure the number of days that elapsed from the 20-week cycle to the 20-day cycle, there were 23 days. That is a long 20-day cycle. It might not sound very long if you are new to Hurst cycles, but I should remind you that the average length of the 20-day cycle is in fact 17 days. If you don't understand why that is, please download the 10 Core Concepts document that I will provide a link to in the description below this video. And so at 23 days, that is a fairly long 20-day cycle. I mentioned that, of course, we were next expecting the 40-day cycle trough to form, and this very dramatic news-induced price move over here on Friday, the 10th of October, brought price down a little abruptly into this 40-day cycle trough. As a matter of interest, we received several emails saying, how can you call this a 40-day cycle trough after such a big move? When news events occur, such as happened on this day, what will tend to happen is that you get increased volatility. The markets will still move according to the influence of the cycles, however, I should point out. And so that increased volatility does not mean that this is a greater magnitude cycle trough. It simply means there was a little bit of news fundamental interaction occurring around that 40-day cycle trough. Price is now bouncing out of the 40-day cycle trough. You can see that it crossed above the 20-day FLD over the weekend, something that will, of course, often happen because of the fact that Hurst defined that cycles play out over real time. It's something that analysts to this day continue to debate. We stick to Hurst's original discovery, which is that the cycles that he found play out over calendar time, 24 hours a day, 7 days a week, and so forth, whether we are trading or not. By crossing over the 20-day FLD, we have generated a target to the upside, which will take us to a slightly higher price, which is interesting. But it is going to be interesting to see how this cycle plays out because of the fact that we are, of course, next expecting an 80-day cycle trough sometime in November. And notice this circle and whiskers for the 40-week cycle, which is looming ahead. In the previous market update video recorded 2 weeks ago, I discussed the bigger picture for these markets, and of course we are expecting these markets to begin to turn bearish because of the fact that they do need to head down into a fairly big cycle trough in early 2026. And so our expectation for the S&P 500 is that as it bounces out of the 40-day cycle trough, we expect it to form a 40-day cycle peak. That could also be a higher price, of course, in which case it will also be the 80-day cycle peak, after which we are going to be watching closely as it turns down into the 80-day cycle trough. Price might fail to reach a new high, I should warn you, because we are expecting markets to turn bearish. I have been discussing in recent market update videos with regards to Bitcoin the fact that it has begun to turn fairly bearish. We had also a 20-week cycle trough over here at the beginning of September, on the 1st of September in this case. I pointed out the bearish significance of the fact that price dropped down below the 20-day FLD in order to reach this 20-day cycle trough. Usually, price should find support at the level of the 20-day cycle FLD as it forms the 20-day cycle trough. There is, of course, one thing that might save Bitcoin, which is the possibility that this could be the 40-day cycle trough, which I discussed in the previous market update video. But you can see that according to this analysis, we have our nest of lows for the 40-day cycle trough over here beneath current price action, making it very likely that the 40-day cycle trough did in fact form last week in Bitcoin. We would now expect price to cross up above the 20-day cycle FLD, and it will then generate a target to the upside. The disappointing news for Bitcoin holders is that this is a fairly bearish cycle shape. As you can see, we have a bearish cycle shape that has played out for this 40-day cycle. Now, if we count some bars here, you will see that that 20-day cycle played out over 24 days. Again, that's a long 20-day cycle, but it would be a very short 40-day cycle. If we assume this is the 20-day cycle, then that means the trough came in late. And of course, late cycle troughs means a bearish underlying trend. We haven't seen much evidence yet of a bearish underlying trend, but if you take a look at my previous market update video, I discussed the fact that Bitcoin is also expected to come down into a fairly big cycle trough. You can see the circle and whiskers creeping in from the right-hand edge of this chart for that 18-month cycle, the trough of which is expected also in early 2026. Now, if we assume that this is the 20-day cycle, then we would assume that the next 20-day cycle trough would occur after another 24 days, assuming that the cycle keeps beating with that 24-day rhythm. Another 24 days would have placed that cycle trough yesterday, and so it makes it very likely that this trough over here on Friday, the 17th of October, was indeed the trough of the 40-day cycle, also a late cycle trough. Is it possible that this is an early 80-day cycle trough? Because here is the whisker for this 80-day cycle. It is just possible. However, we have nevertheless a bearish cycle shape that has formed over there. And so we will need to keep a close eye on Bitcoin for signs that it has begun to turn down into that big cycle trough expected in early 2026. Now let's turn our attention to the main feature attraction, which is gold. What has been happening with gold? It has, of course, been moving upwards with great speed, as you can see. This is, in fact, a monthly chart of gold, and what I am displaying here is what we call a dual analysis. An analysis that has been performed on the basis that peaks are synchronized is displayed at the top of the chart. An entirely separate analysis, which is calculated on the basis that the troughs are synchronized, is displayed at the foot of the chart. This is not one analysis but two separate analyses, because it is impossible for both the troughs and the peaks to be synchronized. I should point out that Hurst only ever mentioned the possibility that these cycles were synchronized at their troughs, but recent work by analysts around the world seems to indicate that it is likely that gold and other precious metals and some commodities are in fact influenced by cycles that are synchronized at their peaks. Nevertheless, as you will know from watching my market updates, I find it useful to keep watching these synchronized troughs. But in today's video, we're going to focus on these synchronized peaks. The reason for that is that when market enters a strong upwards movement, an almost parabolic movement, as you can see, identifying cycle troughs becomes very hard because price is simply not moving down into those troughs at all. And so we are going to focus on the peaks, because it is also, of course, by focusing on the peaks that we can answer the important question that everybody is asking right now: when is the peak going to form? And so let's have a look at these peaks. First of all, you will notice that we have price going all the way back to 1998, so we have a good length of price action to analyze here. We have a 9-year cycle peak, that's this reddish color, that has been identified over here whoops, that's a bit of a skew line, but we have a 9-year cycle peak in about 2002. That's a very questionable peak, of course, because of the fact that gold was just moving pretty much straight upwards all the way to this point over here, had a bit of a correction, and then kept moving upwards over here. And so we would certainly draw a question mark under the positioning of that cycle peak. However, we have a good 9-year cycle peak over here, that is in 2011, and we have another good 9-year cycle peak over here, I believe that's in 2020. And so do we worry about this 9-year cycle peak over here way back in 2002? I don't worry too much about that. In order to really properly decide whether that is a peak of the 9-year cycle, we would probably need at least another 10 years of data before this. We could go and download more data and keep going back in time to identify these peaks, but in my opinion, that's not really very important. What is more important is to understand what is happening now. Remember that these cycles are dynamic and they will change over time, and so focusing on the more recent time period is, in my opinion, more useful. And so zooming in, we can see that we have a fairly good identification of the 9-year cycle peak over here in 2011, another 9-year cycle peak over here in 2020. When markets are influenced by cycles that are synchronized at their peaks, they tend to form W shapes as opposed to M shapes. And so you will see we do indeed have a bit of a W shape over here in gold during that period of time. And so that looks fairly good. This identification of the 54-month cycle peak in gold also looks fairly good to me. That was sometime in 2016. So let's see what has been happening since 2020. Following this 9-year cycle peak over here in 2020, we have an 18-month cycle peak that has been identified at this high price over here in early 2022. We then have another 18-month cycle peak that has been identified at this position over here. That was in late 2023. Now, I should point out that as price has been starting to accelerate upwards, as difficult as it becomes to identify cycle troughs, it is also fairly difficult to identify these cycle peaks. And so while this peak over here in 2022 looks like a very good 18-month cycle peak to me, there would be a bit of a question mark around the positioning of this cycle peak over here. Is it possible that that peak should be positioned here? Or perhaps we had a very short 18-month cycle with a peak over here. It is impossible for us to answer that question. What is important for us to realize is that there might be a bit of a question mark surrounding the position of the next 18-month cycle peak. The next 18-month cycle peak is presented in our analysis by this circle and whiskers at the top of the chart. Because of this question mark surrounding the position of the latest 18-month cycle peak in late 2023, therefore we need to consider this position with a bit of a pinch of salt, as they say. Similarly, the circle and whiskers for the 54-month cycle peak must also be given some room to breathe. Bear in mind that that position for the 54-month cycle peak has been calculated on the basis of averaging past 54-month cycles. And so we are looking back many, many years to calculate the position of that 54-month cycle peak. Over the years, the length of that 54-month cycle has no doubt been changing, and it is impossible for us to know exactly what the current wavelength of that 54-month cycle is. Changing our time frame and looking here at a weekly chart, we get a little bit more detail, and we can see this nest of highs with the 54-month cycle peak expected there, 18-month here, 40-week here, and 20-week here. You can see we're getting a little bit more detail. This nest of highs is staggered over to the left, which simply means that this peak is coming in later than would have been expected by the projection of the much longer cycles. That simply means that those longer cycles have been expanding in the meantime, and so it does not indicate an error in our analysis. This is the slightly questionable position for the 18-month cycle peak at the end of 2023. Now that we can see a little more detail on on this chart, let's ask ourselves about the shorter cycles. What about this cycle peak over here, which has been phased as a peak of the 40-week cycle? How confident are we in the positioning of that cycle peak? Well, if we measure forward from the potential 18-month cycle peak at the end of 2023, you can see we have 328 days or 46.9 weeks. That is slightly long for a 40-week cycle, but it would be very short for an 18-month cycle, and so that position for the 40-week cycle peak seems fairly good to me. Measuring forward again to the 20-week cycle peak that has been phased at the end of April this year, you can see again we have a long 20-week cycle at 175 days, but not impossibly long. And so the message is clear. These cycles are running longer than the default nominal model discovered by Hurst 50 years ago. I should point out, of course, that the default nominal model that we are working with is a nominal model that Hurst discovered by analyzing stock market price movements. He, in fact, dedicated an entire section of the cycle's course to a discussion of gold, in which he suggested that gold cycles probably run longer than the stock market cycles do. And that certainly seems to be what is happening here. Now, if these cycles have been running longer, then we could expect them to keep running longer, and so this 20-week cycle, which elapsed over 175 days, could take another 175 days to play out to the next 20-week cycle peak. And so let's count another 175 days from this 20-week cycle over here, and you'll see that 175 days brings us to last week. And so we need to be on our toes for the possibility that this big 54-month cycle peak could be in the process of forming about now. So let's zoom in and see how we will be able to identify the fact that the important peak has formed in the market. Here we have all the price action since March of this year. Here is that 20-week cycle peak we were looking at just a moment ago. Here is our very big and very straggly nest of highs for this very big cycle peak. I'm actually going to hide the longer cycles because those longer cycles can be distracting. We're going to focus on the 20-week cycle and shorter, but we need to bear in mind the fact that when the next 20-week cycle peak does form, it is likely also going to be a peak of a very big cycle. Having hidden those longer cycle circle and whiskers, you can see we have a neater nest of highs indicating the time at which the 20-week cycle peak is expected. Considering this analysis in a little more detail at this point, you will see here is the 20-week cycle peak. I've already discussed that. That's a very likely position for that 20-week cycle peak. Then here we have an 80-day cycle peak. If we count the number of bars that elapsed in that 80-day cycle, you will see there were 92 days. And if we measure forward another 92 days, that would indicate that we could expect this peak to form in about 3 days' time. Of course, we do not expect these cycles to come in with absolute accuracy in that way, but certainly the time is close for the next 80-day cycle peak, which will also be a 20-week cycle peak, and also potentially a much longer cycle peak. So, zooming in even further, what is our level of confidence in this analysis? This seems likely to be a good position for the 80-day cycle peak. What about this position for the 40-day cycle peak? Well, of course, as this market has accelerated upwards, it has become increasingly difficult to identify these cycle peaks. That position seems fairly good. It's a very long 40-day cycle, but we have already established that these cycles are probably running long. And so that seems fairly good. My level of confidence is certainly at the 80-day cycle level, maybe the 40-day cycle level, but at this point it becomes a little difficult to really identify these cycle peaks accurately. And so therefore projecting forward to the next position of that cycle peak becomes a little bit hit and miss. How are we going to know that the peak is in place? Well, we will be using our cycle tools. Let's zoom in and take a look at the VTL first. Here are the VTLs for the 5-day, the 10-day, the 20-day, and also, almost on top of it, the 40-day and 80-day. as price crosses down through these VTLs, it will confirm the fact that a peak of a magnitude 1 degree greater than the VTL itself has formed in the market. In other words, when price crosses down through the 10-day VTL, it confirms that a peak of 20-day magnitude has formed. When price crosses down below the 80-day cycle VTL, it confirms that a peak of the 20-week cycle has formed. The other cycle tool that we will be watching is, of course, the FLD. This is the 5-day FLD, the 10-day, the 20-day, 40-day, and 80-day FLDs. As price crosses below an FLD, it confirms that a peak of that particular cycle has formed in the market. And so you will notice that over the weekend, price crossed down below the 5-day FLD. That confirms that a peak of 5-day magnitude has formed, or I should say of at least 5-day magnitude. If price crosses down below these FLDs, it will confirm a greater and greater magnitude cycle peak has formed. And so we need to watch gold carefully. At the moment, gold is still moving up. Yes, it had a bit of a bad day on Friday, but one bad day doesn't mean that this bullish move is over. It is, of course, possible that this big and important cycle peak has formed and that the first day of downward movement occurred on Friday, but it is too soon for us to confirm that. We need to be watching how price behaves as it encounters each one of these FLDs in order to confirm the magnitude of the peak that has formed. Which brings me to a really important point about not only gold but Hurst cycles and this approach generally. I say it often, and I will say it again. Hurst cycles is not a crystal ball. We cannot predict the future. Hurst cycles, however, does allow us to anticipate important turns in the market. And that is what this nest of highs is doing over here. It is not predicting that the peak has formed, and it's not telling us that the peak definitely formed on Friday. It is enabling us to anticipate the fact that a big cycle peak should be forming soon, possibly has already formed. And so our trading decisions need to be made on the basis of that anticipation as opposed to that prediction. One final thing to say about gold. We were asked in the past week or so what the target is for the current gold move upwards. It's an interesting question because the targets that we follow are of course generated by our FLDs. And so looking at gold, we have to ask ourselves what is going to be the target for this move. Because all of our FLDs are entering into this cascade pattern, which is this pattern where they all run parallel to one another, of course, and are heading straight upwards, we don't have any remaining targets. All of the upward targets for these cycles have already been crossed. And so do we have any targets to the upside? I would like to point out one possible target that we could consider. Notice how price has interacted with this 9-year FLD. Here you can see price came down to the 9-year cycle FLD and actually tracked along it for many months, way back in 2015. It then finally crossed above that 9-year cycle FLD at this point over here. Now this is pure speculation, but that interaction between price and the FLD looks a little more like what we would usually label a BC category interaction. That implies that this trough over here is a very, very high magnitude cycle trough, at least 2 degrees longer than the 9-year cycle. In other words, either a 36-year cycle trough or perhaps a 54-year cycle trough. Calculating targets when price forms a BC category interaction with an FLD is a little complicated, but one way in which one can do it is to measure this price move over here and then add that price move to the point at which the BC category interaction starts, which is over here. If we measure this price move from about $250 to almost $2,000, that generates a target of only $2,750. In other words, we have already exceeded that target. But here's an interesting question. We are looking at this chart on a logarithmic scale, as I think you can see. And so what if at this kind of time scale our targets are not simple price targets, but could in fact be calculated on the basis of a logarithmic scale? In that case, this first move over here could be described as a 5x move. In other words, price multiplied itself by 5 times to reach this high price over here. If that is the case, then we would apply another 5x move to the next part of the cycle move. In other words, taking price from about the $1,000 level up to the $5,000 level. And that is why the only potential FLD target that we have at the moment for gold is at about the level of $5,000. I do hope you found this market update useful and interesting. If you have any questions, please put them in the comments below the video or join us on our Hurst Cycles Discord server. I look forward to hearing from you.